Anastasia Amoroso is the chief investment strategist with iCapital, tweeted just a few moments ago, which is why she is on the program right now. Quote, "I cannot conclude that the low we've seen is the low. It's okay to nibble now, but it's also okay to give up some potential upside to get more clarity first. To call a bottom, we'd need to see de-escalation and better growth outlook. Growth is being revised down instead." You've heard the conversation. Jim Lebenthal says now's the time to go all in. He says he's going to put the name back on himself. Is he making a mistake? Are others going to be mistaken if they follow him?
I don't think they're going to be mistaken necessarily if they have a long enough time horizon. So I think Jim is right. It's time to buy a few select things that you have really, really high conviction in, and you should give yourself plenty of time horizon. I think everybody would agree that this situation is likely not to turn around on a dime, but 12 months from now, we're likely to arrive at a better place. So if you can pick the spots carefully, if you can select the stocks, I think that's the right approach. But the reason, Scott, why I'm not ready to call in all clear on this market and say that this is the low, the reason for that is as many silver linings as we have, strong jobs and, the Fed, it's a little bit less hawkish now. As many as we have, you still have the reality that the escalation on the ground in Ukraine is more likely right now near term than de-escalation. I mean, if you think about Putin and what he's done to date, how do you plausibly go back without having won anything? How do you go back to a country, to an economy that's in shambles without getting some sort of a win? And at the same time, if you look at Ukraine, they've mounted a significant pushback to Putin, but they're not, and because of that, they're not yet ready to sign a deal. So as long as the standoff continues, the chances are Vladimir Putin is likely to escalate more than to de-escalate. So that's one source of uncertainty that I worry about for the markets. And first of all, it is a terrible situation on the ground in Ukraine. But for all of us watching the markets, it's about the commodities. So have we really seen the peak in wheat, in oil, and natural gas? I'm just not sure. I know that for every $10 move in oil, you get a certain repricing higher than inflation. So this is supposed to be the environment where inflation pressures are abating and bottlenecks are abating, but instead we're likely to be in the exact opposite environment. So this is why I say it's okay to give up a little bit of upside, potentially for the market. If we have a turnaround tomorrow, it's okay to give that upside up so that we have the clarity. And the last thing I would say, Scott, let's put Russia and Ukraine conflict aside for the time being. But now you look at the data. And if you look at the global economic data, it has actually peaked in December of last year. And it's starting to slow down already, just as the Fed is starting to talk about ramping up rates. So that in itself is not a good combination. And I think what we see in the next few months are downside earnings revisions, which historically didn't spell upside for stocks.